The amount for income tax expense, we got an amount of how much? It was 51,600. So that is what you are supposed to have gotten there. So the amount for, it was working number 4. Working number 4. So income tax expense was an amount of 51,600. So this is where you are supposed to have stopped from. This is where we are supposed to have stopped from. So in this case, we can go on with the next working so that we can be able to now, in this case, generate the statement of profit or loss, because that is what they want us to be able to generate. So we can now, in this case, get the statement of expenses, because we said when you are coming up with the statement of profit or loss or the income statement under published financial statements, you don't present the expenses separately, but in this case, we categorize or we group them. We categorize or we group them. So we group them as cost of sales, we group them as admin expenses, we group them as selling and distribution expenses, or we can end up having to group them as what? As maybe finance expenses, as maybe finance expenses. So in this case, we can now in this case get the statement of expenses. So statement, this can be our working number 5, statement of expenses. Statement of expenses. And this one will likely be guided upon as what you've actually been provided for as the different expenses, maybe in the trio balance or what has actually ended up having to arise in the workings, or maybe in this case, the additional information. So in this case, the predominant expense we are talking about is the cost of sales. So cost of sales. We are talking about, in this case, also the admin expenses. So the admin expenses, administration expenses, you can write just in full. Then in this case, we have the distribution expenses. Distribution expenses. So distribution expenses. So if you have the finance expenses, which have actually been affected, you can also, in this case, be able to include them. So have we been given the finance expense? Have you been given the finance expense? You can always, in this case, look at the trio balance, whether there's actually any finance expense you've actually been given. And of course, you can be able to include. So of course, in this case, in the trio balance, you're having to see distribution costs, administration expenses. So all those ones, you're able to see them. Then for the cost of sales, of course, for the cost of sales in this case, you can in this case maybe compute if you've been given the opening stock, maybe purchases, then you less in this case what the closing stock or the closing inventory. So we can actually end up having to look at, in this case, what could be our cost of sales. So of course, we've been given the closing inventory, we've been given the purchases at cost, and we've been given the opening inventory. We've actually been given the opening inventory. So in this case, we have the opening inventory of 138,000. Then in this case, you have the purchases at cost 667,000. Then of course, now in this case, we have the closing inventory. We have the closing inventory. So closing inventory, most likely in this case, it will likely be in the additional information. So we are told in this case, so no other accounting entry has actually been made. So there was a provision for these of 52,000. Inventory count on 31st of December revealed a value of inventory at cost of 85,000. So we can start with the balance as per the trio balance. So in this case, we have balances as per the trio balance. So in this case, for the cost of sales, in this case, we will have the opening stock plus purchases minus the closing stock. So of course, the opening inventory is what you can be able to see in the trio balance. It is an amount of 138,000. So let's try to see 138,000. You add the purchases, in this case is 667. 1,000. Then we can less what you've actually been given as the closing inventory in additional information number, is it number 5, which is actually 85 million or 85 million. So try to do the computation. So what do you get? So what do you get when you do that computation? You get 720,000. So remember, in this case, our shillings here are actually in thousands. Our shillings are actually in thousands. Our shillings are actually in thousands. So you'll end up having to get here 720 million. 720 million. So balances as per the trio balance, where you do that computation, you'll get this one as 720 million. Then the admin expense we've actually been given in the trio balance, you can be able to see they're coming to 93,500. So 93,500. 93,500,000. Then distribution, in this case, it is 44 million. 44 million. So once you have, in this case, the balances up as per the trio balance, you look at what you had actually been given as additional information, whether there was actually any expense that was having to affect these items. For example, sometimes you might have been told that maybe there's a particular item of depreciation that you must be able to recognize under what admin expenses. Another one you must be able to recognize under what distribution expenses. Maybe motor vehicles, they'll say that in this case, they were selling and distribution motor vehicles. So you recognize that depreciation where? Here. So depending upon what you've actually been advised, you now, in this case, allocate the expenses. Allocate the expenses as required. Allocate the expenses as required. And then in this case, if you look at what we had actually computed as working number three, there was that amount involving 7 million, which was a fraud by, is it the finance manager? It was a fraud by who? It was a fraud by, is it the financial controller? And of course, I was able to advise that in this case, this one will actually go under what? Admin expenses. Admin expenses for this particular year. So in this case, we have as per not number, is it not number? So that item of fraud, is it not number? I think it is not number 3. So there was discovered what? A fraud. Of this amount, 7 million relates to the year ended 31st of December, with the balance relating to the prior period. So the amount of 5 million is actually for the prior period. But this one is for the current year. But since in this case, it was by an administration staff, then that was money that was actually lost. That was actually money that was actually, in this case, what? Lost. So they won't be able to recover this particular what? Money. So in this case, you can be able to write it off. You can end up having to write it off. You can write it off as a bad debt, which they might end up not having to be able to recover. So this one is as per note number 3. So it will go under what? The admin expenses. It will go under the admin expenses. So they won't be able to recover that amount. So unless in this case we are told they were able to recover it, but they won't be able to do what? Recover it. Then there was a loss on what? On disposal. So loss on disposal. Remember the loss on disposal, where I was able to indicate that it will go to the cost of sales. Loss on disposal of was it a plant? Loss on disposal of plants. Loss on disposal of plants. Loss on disposal of plant. It was an amount of how much? It was an amount of how much? Loss on disposal of plants. We computed it under working number 1. And of course, we said in this case, that one will end up having to go to what? To the cost of sales. So any gain or loss on disposal of plant should be included within what? The cost of sales. It was an amount of 38.50. So this one will go under what? Cost of sales. It will actually go under cost of sales. So we'll allocate it under cost of sales. Then, of course, you have now in this case what? Depreciation. So there were depreciation. So depreciation in this case for buildings, you are told it will go under what? Admin. Depreciation for buildings will likely go under what? Admin. So what was the amount for depreciation for buildings? So we can start with the buildings. Buildings. It was how much for buildings? What did we get as depreciation for buildings? As per additional information number 2, we are told that one you allocate to administration. It was 10 million. It was 10 million. It was actually 10 million. Then in this case, we have plant. So plant, we are told it will likely go to cost of sales. Plant, it was how much? Plant, it was 14,500. So 14,500,000. So that one will likely end up having to go to what cost of sales. Then motor vehicles, it will go to distribution. So motor vehicles, we are told it will go, it was how much for motor vehicles? Motor vehicles was how much? Motor vehicles, it will go to distribution. It was 14 million. It was 14 million. It was 14 million. 14 million. Then the last one, in this case, you are told office equipment. So office equipment. Office equipment. This one we are told it will likely go to administration. Office equipment, it was how much? As per our computation, it was how much for office equipment? It was 5 million. It was 5 million. So it will go to administrative expenses. Administrative expenses. So those are the items that in this case will likely end up having to affect the statement of what? Of expenses. So we can try to add. I don't think there's any other item. There's no any other item that will affect these particular expenses. So we can end up having to add and see how much are we having to get as our totals. So this one is 58 million. What about cost of sales? Cost of sales 738,340. 738,340. 738,340. 738,340. What about in this case admin? Admin is how much? Admin 115,500. 115,500. And I hope this one is okay. I've just added, I think it's 58. Hope it is okay. I think it is 58 years. So this plus this, you should be able to get 58. So that actually ends up having to become what? Our statement of expenses. Statement of expenses. Statement of expenses. So once you have the statement of expenses, now in this case, you can now prepare what? Your statement of profit or loss. You can now in this case prepare your statement of profit or loss. Statement of profit or loss. So BD Limited, statement of profit or loss. You have BD Limited. Year ended. It is the 31st of December. 31st of December 2022. So you can be able to present in shillings of thousands. And of course, automatically in this case, we'll start with the revenue. What was received as revenue? What was actually received as revenue? Revenue in this case, you've actually been given 1123,500. But remember, there's something in this case I told you under working number 1, where there was this item. So during the year ended 31st of December, BD Limited disposed of an item of plant for cash proceeds of 20 million, which were credited to the revenue account. No other accounting entry was made. The plant had a cost of 39,700,000 and had an accumulated depreciation of, in this case, 15,860,000. So this is not actually part of what? It is not actually part of the revenue or the sales. So we have to eliminate it. We have to eliminate it. So that means in this case, our sales will become how much? So I can be able to see you've already been able to give me the figures. So in this case, we have 1123,500. Then we minus 20 million. So you'll get in this case 1103,500. So remember, this one was an item of plant. These amounts had been posted in the revenue account. Remember, when you talk about the revenue here, they are simply the sales. They are simply the sales of the company in terms of trading activities. But now in this case, when you sell a plant, it means in this case, you don't actually end up having to include it under revenue. But basically, in this case, it has to be considered as what? As maybe an amount received in terms of cash. So you must be able to get either the gain or loss on what? On disposal of this item, which we did under working number 1. So this is what we'll be able to end up having to get as what? As the revenue. Then, of course, we can get the cost of sales, which in this case we've computed under working. Is it working number 5? So the cost of sales in this case we've been able to compute it exactly 738,340. 738,340. And therefore you can be able to get the difference. You can get the difference. You can get the difference. The difference is how much? So that you can be able to get the gross profit. The gross profit comes to how much? Gross profit comes to how much? 365,160. 365,160. 365,160. 365,160. So that in this case, what our gross profit there. Then we can less our expenses. We can less our expenses. We can less our expenses. We have in this case administration expenses. We have distribution expenses, which you've done in this case under working 5. We've done under working 5. So in this case, our administration expenses was coming to 105. Is it 105? So distribution was coming to 58 million. This one was 58 million. Then the administration was coming to 115,500. Is it? Administration expenses was coming to how much? This one. So this one was 58 million. Administration was 115,500. 115,500. 115,500. So that is in this case the admin and of course what? Distribution expenses. Admin and distribution expenses. So there's no finance expense. There's no finance expense. This means in this case you'll end up having to get, I think there's a finance expense. There's a finance expense of so if you look at the debit side, so bank balance, bank interest, there's actually bank interest. So finance expense normally comprises of what? Of any form of interest. Of any form of what? Interest. Any form of interest. But now in this case, you can get the profits. Profit before tax. Before tax and before interest. Profit before interest. Profit before interest and tax. What is the profit before interest and tax? You can give me the figure. Then in this case, of course, you can now in this case put the finance costs, where we have in this case that what? Bank interest. That bank interest of 2,400,000. 2,400,000. That becomes our finance cost. So how much are you having to get? The profit before interest and tax. The PBT. PBT is how much? Profit before interest and tax is how much? 191,660. 191,660. 191,660. So now in this case, you can less the interest so that you can be able to get profits before tax, the PBT. So the PBT, I can see you're giving a figure there, 189,260. 189,260. So remember, in this case, this one is the bank interest. So the bank interest will actually been given in the trial balance. Remember, if we had in this case, for example, debentures, we would have still added the debenture interest as part of what? The finance cost. If in this case, for example, in the trial balance, also we had preference, like in our previous question. In our previous question, it was comprising of debenture interest and of course what? Preference dividends, preference dividends that was actually paid. So it was actually comprising of these particular two. But now here we don't have these ones. We just have the bank interest. So it becomes what our finance cost. So the finance cost is normally comprised of any form of interest that the company might have ended up having to pay. So that will end up having to give us what? Profit before tax of 189, 260. Then in this case, after that, because in this case it is before tax, we have to consider our tax. And this one we had actually computed the income tax. It was under working number 4, which in this case is the last item we computed in our previous class. It was 51,600. 51,600. 51,600. So 51,600. So if you less that, how much are you having to get? So the profits for the year. So how much you're having to get as the profits for the year? So profit for the year. The profit for the year, you're getting 137,660. So it comes to 137,660. So that is the profit for the year. That is the profit for the year. The profit realized for the year. The profit realized for the year. Then the next item they want us in this case to prepare, it is the statement of changes in equity. So, and of course, in this case, we'll ideally be looking at how the equity elements or items are having to change, how the equity elements or items are having to change. So, so to note in this case, or to be able to know which are the equity elements, you have to look at the 𝐶𝐵 balance. You have to look at the 𝐶𝐵 balance. If you look at the 𝐶𝐵 balance, the equity elements, they likely be appearing as amounts on the credit side of the 𝐶𝐵 balance. So you have ordinary share capital. They are the very, very last items. We have ordinary share capital. We have share premium. And of course, you have what? Retained profits. We have the retained what? Retained profits. And of course, in this case, you are told that there was actually an interim dividend that was actually paid of how much? 10 million. That was actually paid of 10 million. That was actually paid of 10 million. So we can end up having to look at how these items are having to change, but also we have to take note of, there was an item here. So on 30th December 2020, the company directors invited the current shareholders to subscribe for rights issue on the basis of new shares for every 5 shares held at an exercise price of 15 shillings, at an exercise price of 15 shillings. So maybe in this case, before we look at that statement of changes in equity, we can in this case compute the amount of extra shares that were issued, the amount of extra shares that were issued out of the rights issue. Remember, when they talk about the rights issue, is where the company decides to give extra shares or more shares to existing shareholders, not an outsider party. To existing shareholders, it is normally in proportion to the number of shares they're having to hold in the company, for the number of shares they're having to hold in the company. So in this case, we have what we are calling what? The rights issue. We have the rights issue. Rights issue. This is the rights issue, whereby we are told that on 30th December 2022, the company directors invited the current shareholders to subscribe to a rights issue on the basis of 1 new share for every 5 shares held at an exercise price of how much? 15 shillings. So in this case, we're having to say that for 5 shares held, you are having to get in this case how many shares? One share. So what are the existing number of shares? What are the existing what are the existing number of shares? Number of shares. What are the existing number of shares? What are the existing number of shares? So maybe I can ask, what do you think are the existing number of shares currently? Try to think. What are the existing number of shares according to you currently? What are the existing number of shares according to you currently? I can see Valerie Wafula says 200 million. Karen Paul says 20,000. Another person can try. Another person, Daniel says 20K, 20 million. 20 million. So it is okay. I know all of you are actually correct. It's only that in this case, you know, our figures are actually in thousands. So our figures are actually in thousands. So you can be able to put actually in the rights issue in thousands. So if you look at, in this case, the ordinary share capital we have, if you look at the share balance, the ordinary share capital we have in this case is 10 shillings per value. That overall is having to give us an overall ordinary share capital of 200 million. And therefore, in this case, for us to be able to know the current number of shares, we'll be able to take the 200 million. We divide in this case by the price per share. And of course, in this case, this one will likely end up having to give us how much? 20 million shares. 20 million shares. 20 million shares. 20 million shares. So 20 million shares. 20 million shares. 20 million shares. So that is what it likely end up having to give us. So it means they had 20 million shares currently, but for every 5 of these, you are getting what? One share. For every five of these, you are getting what? One share. So for us, in this case, to be able to know how many shares were issued in terms of the rights issue, we'll be able to take, so the rights issue number of shares. The rights issue number of shares, we'll end up having to take, in this case, 20,000. We multiply by 1, we divide by 5. We multiply by 1, we divide by 5. And therefore, in this case, it will end up having to give us 4 million. I think it will actually give us 4 million. It will give us 4 million. It will give us 4 million shares, which were issued as what? As extra shares. So the rights issue in this case means that they issued 4 million extra shares to existing what? Shareholders. So 4 million extra shares to existing what? Shareholders. So the shares on the rights issue are how much? 4 million? 4 million shares. They were actually 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 4 million shares. Then, of course, you're having to be told that in this case, so they actually issued these shares at a price of how much? 15 shillings. They actually issued the shares. The shares were issued. The shares were issued in this case at a price of each 15 shillings. But remember, in this case, the par value or the face value of the shares was actually how much? 10 shillings. And therefore, in this case, we'll say the shares have been issued at what? In this case, we'll say the shares have been issued at what? So the par value was 10, but now in this case, they issued them at 15 shillings. We'll say the shares have been issued at what? At a premium. They have actually been issued at what? At a premium. So in this case, it means our premium amount will be how much? Our premium amount will be how much? Our premium amount will likely be how much? Will be 5 shillings per share. 5 shillings per share. So that's what in this case you need to be able to take note of. So of course now in this case, we'll say that so the ordinary share capital will end up having in this case transfer into the ordinary share capital. The ordinary share capital, it will likely in this case be 4 million. 4 million. You multiply by, in this case, how much? 10. You multiply by 10. Then in this case, to the share premium, you'll end up having to take 4 million. You multiply by, in this case, 15 minus 10. 15 minus 10. And therefore, to the ordinary share capital will end up having to increase by 40 million. So the share premium account will end up having to increase by 20 million. 20 million. So that's why in this case, that particular rights issue will actually end up having to affect the books of accounts here. So we'll end up having to affect what? The books of accounts here. So the shares were held at an exercise price of how much? 15 shillings. So they ended up having to exercise the rights issue at how much? 15 shillings. At 15 shillings. So of course now in this case, the price was actually supposed on the trading day, the price was actually supposed to be 20 per share, but the rights were actually exercised at 15. The shareholders were having to give them 15 shillings, not the 20. which in this case was like the prevailing market price for these particular shares, but they paid them 15 shillings, which was 5 shillings beyond 5 shillings beyond what the par value. So the 5 extra shillings becomes what the share premium. So to the ordinary share capital, you'll end up having to transfer 40 million. And in this case, to the share premium account, we'll end up having to transfer how much? 20 million. So those particular two items will likely end up having to do what? Affect our statement of changes in equity in that regard. And therefore, in this case, you are told the proceeds from the fully subscribed rights issue were credited to the suspense account. If you look at, in this case, the 𝐶IO balance, the suspense account is how much? If you look at the 𝐶IO balance, the suspense account is how much? If you look at the 𝐶IO balance, there's an item for suspense account. It is 60 million. So if you add the 240 plus 20, you get 60 million. So the proceeds from the fully subscribed rights issue were credited to the suspense account. So instead of having to credit them in the correct accounts, which you now in this case identified which accounts in this case are having to be affected, they just put a suspense account is just recording amounts, which in this case you cannot categorically be able to place them somewhere. But now in this case, we have been able to place them 40 plus 20, which is actually 60. So therefore, in this case, you can end up having to prepare our statement of changes in equity. You can end up having to prepare our statement of changes in equity. It is BD Limited. It is BD Limited. It is BD Limited statement of changes in equity. Statement of changes in equity for the year ended. For year ended 31st of December 2022. 31st of December 2022. 31st of December 2022. 31st of December 2022. In this case, we have ordinary share capital. We have in this case share premium. And we have in this case retained profits. Retained profits. We have retained profits. Of course, we can do that. So our shillings are actually in thousands. So you have in this case the balance brought down as per the 𝐶IO balance. The balance is brought down as per the 𝐶IO balance. So for the ordinary share capital, in this case, we have 200 million. This one we have 50 million. This one we have 223,640. 223,640. 223,640. 223,640. But remember, there's something I told you about this one. So there's something we'll deduct from this one. How much will you deduct here? We have to adjust this one with how much? We'll have to adjust this one with how much? We'll adjust with how much? 5 million. You remember that 5 million? The 5 million that was actually lost by that financial controller. So remember, in this case, if you look at note number 3, it has been discovered that the former financial controller of BD Limited engaged in fraudulent financial reporting. 12 million of trade receivables are non-existent and need to be written off. Of this amount, 7 million relates to the current year, with the balance relating to the prior year. Remember, in this case, this retained earnings is as per the start of the year. So it means these retained earnings, it is for the year 2021. It is for the year 2021. But of course, for the year 2021, so we have to adjust for the prior periods because they discovered it in the current year. But of these 12 million, the 5 million relates to the prior year. So in this case, we can end up having to adjust it with the bad debts written off. In this case, it was an amount of 5 million. And therefore, in this case, adjusted balance, or we can leave it there. So can maybe put the adjusted balance. So let's just put it here. This one comes to 200 million. This one is actually 50 million. This one comes to 218, 640, so like that. So there's something that Irene wanted me to repeat. What do you want me to repeat? What do you want me to repeat? Kindly repeat. Kindly repeat. Then, of course, you've been able to say here, we have the rights issue. The rights issue in this case is having to affect what? The ordinary share capital. The rights issue is having to affect the ordinary share capital with how much? 40 million. 40 million. Then in this case, we have the share premium. So you have the share premium on the rights issue, the share premium on the rights issue. So the rights issue share premium. So the premium realized on the rights issue is actually 20 million. Exactly 20 million. So it will add to that. So Irene, what do you want me to repeat? 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 On the ordinary share capital. So on the ordinary share capital. So this computation or here. So this particular balance here is actually in the 𝐶𝐵 balance. All these ones are actually in the 𝐶𝐵 balance. Then this particular rights issue is what we've been able to say it is here. You need to look at the last note number 6. On 30th December, the company directors invited the current shareholders to subscribe for a rights issue on the basis of 1 new share for every 5 shares. So if you had 5 shares, you are given 1 share as a right issue, issue. And therefore, in this case, we need to be able to compute the number of shares in terms of rights issue that were issued. So first of all, in this case, we must be able to know how many shares are existing currently. Because for the number of shares existing currently, every 5 of them will represent 1 share as a right issue. So you've been able to do the computation. It is 200 million divided by 10. You get 20 million shares. 20 million shares. So the rights issue here was actually, in this case, you do the cross multiplication. Just do cross multiplication because 5 shares, 1 share. What about in this case, 20 million shares? What about 20 million shares? You do the cross multiplication. That's what you've done here. And then in this case, you'll get that in this case, the rights issue was actually 4 million shares. 4 million shares. But remember, these shares were having to be issued at how much? 15 shillings. And their par value is 10. In any case, in this case, the company issues shares at an amount over and above the par value. We say the shares have been issued at a premium. That premium amount is not normally included in the ordinary share capital or in the capital items. It has to be put in a separate account. It has to be put in a separate account. It has to be put in a separate account, which we call what? The share premium. That is the requirement. That is the requirement. Proper maintenance of capital. Proper maintenance of capital. Proper maintenance of capital, you don't mix. You put them separate in what we call what? A share premium account. A share premium account. And then in this case, we've been able to separate. So in this case, the par value in terms of the ordinary share capital, it is 10 shillings as per the 𝐶𝐵 balance. So we take the 4 million, we multiply by 10. Then the extra amount over and above the par value is the share premium. It is 15 minus 10, which is 5. You multiply, you get 20 million. These amounts, you've been told, they were maintained in the suspense account, which is 60 million as per the 𝐶𝐵 balance. And therefore, in this case, you'll get the 2 items there. So we come to, in this case, what? Do adjustments here. So that is what you'll be able to do in this case regarding the ordinary share capital and the share premium. Now, in this case, we have the profit for the year. Profits for the year. Profits for the year. So this one, you end up having to pick what we realized as profits in our statement of profit and loss. And I think it was coming to how much? 137,660. 137,660. 137,660. what if the shares are issued at a value less than the par value? So that is what we call what? Issuing the shares at what? At a discount. Issuing the shares at what? At a discount. 𝗖𝗂𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗍𝗂𝗑𝑔𝑝𝑒𝑜𝑎𝑟 not having to tell me, UPIP are not having to tell me. And of course, now in this case, that will simply mean that in this case, you've been able to allow a discount. You've actually been able to allow a discount, or which you'll have to go into your pockets, you cover for that discount. You cover for that discount. You'll have to go into your pocket, you cover for that what? That discount. So in this case, it will likely eat, maybe in this case, into what? Into your profits. You'll have to, in this case, get into your pocket, you cover for that what? Discount. You'll end up having to say, the shares have actually been issued at a discount. But if it's an amount over and above the par value, then we say, in this case, the shares have actually been issued at what? At a premium. But of course, now in this case, your company law teacher must have told you, generally, the issue of shares at a discount is prohibited. So rarely you'll get in an exam, they have told you shares were issued at what? At a discount. Sawa. Generally, the issue of shares at a discount in a company is prohibited. So you won't get in a question, you are told that the shares were issued at what? At a discount. So they'll tell you they were issued at what? At a premium. At a premium. So that's what you must actually be able to take note of that. So in this case, we can actually be able to do the addition because there's no any other item having to affect these elements. So what are you having to get here? This one is actually 240 million. This one is 70 million. And this one is how much? When you add 218,640 plus that, 218,640 plus that, 218,640 plus that, but there's one item which you haven't included. You people are not having to tell me. You people are not having to tell me. You people are not having to tell me. So there's this item of, you can include it. You can include one item here, just squeeze one item here. There was an interim dividend. I think there was an interim dividend paid of 10 million. So we'll include it here. Can include it here. So interim dividend. So we have in this case interim dividend paid. So this one will end up having to eat into our profits of 10 million. So we can deduct. Then of course now in this case we can get our totals. This one is 240 million. This one is 70 million. Then this one will become how much? This one will become how much? 346,300. 346,300. 346,300. If you minus the 10 also, 346,300. I can see you're saying 346,300. 346,300. 346,300. I think it will be like that. 346,300. 346,300. 346,300. So that's why in this case, you'll end up having to come up with what? Your statement of changes in equity. Your statement of changes in equity. Statement of changes in equity. So now we can look at the last item, which is actually statement of financial position. Statement of financial position. We can look at the last item, which is statement of financial position. Statement of financial position. But before we look at that, we can do another working. The working will be for what? Which working are we going to look at now? Which working are we going to look at before we come up with the statement of financial position? Which working do you think you are going to come up with? In this case, calculate the property, plant, and equipment. So it will be working 7. Working 7. So in this case, the PPE, property, plant, and equipment movement schedule. Movement schedule. So in this case, we'll have to identify what we have in this case as properties, plant, and actually equipment. So we have property, including buildings. So it says you have property. We have property. We have in this case plant. We have plant. We have in this case motor vehicles. We have motor vehicles. Then in this case we have office equipment. So office equipment. We have office equipment. Then we must be able to get the total. because in this case we need one figure that in this case we just need to take to what? To the statement of financial position. So with this one, you'll be able to start with the balances at the start of the year. So remember, we have to indicate our shillings. Our shillings are actually in thousands. Our shillings are actually in thousands. So the balances brought down. So the balances brought down in this case, the ones you have actually been given there, it is actually 600 million. This one is 280 million. This one is 70 million. This one is 40 million. So we must, in this case, be able to, we must actually be able to, in this case, adjust by having to do what? Less the accumulated depreciation. We need to less the accumulated depreciation. Less the accumulated depreciation. We need to less the accumulated depreciation. Accumulated depreciation. In this case, for property, plant, and equipment, I think it is 80 million. It is actually 80 million. Then in this case, so there's this particular item here, this one for plant. This item for plant, we had done some adjustments. If you look at working number 2, we had done some adjustments, in this case, under working number 2. So under working number 2, in this case, we had said the cost of plant was actually, of course, 280 million. But of course, they disposed of an item of plant of 39 million. They disposed of the item of plant of 39 million. So in this case, we can actually end up having to, first of all, do what? Deduct. We can, in this case, first of all, end up having to deduct the disposal. So the disposal, we can just do the accumulated. Then in this case, we less the disposed item. So the disposal of an item of plant. So this is of the accumulated depreciation for these items. We have 80 million. We have 80 million. This one we have 160. This one we have 42 million. This one we have 15 million. 15 million. Then we have a disposal. So we have, in this case, a disposal. There was an item which was actually disposed of plant, which you're having to be told it actually costed how much. So the cost of this item, it had an accumulated depreciation of this. The plant had a cost of 39,700,000. So 39,700,000. So that item was actually, in this case, done what? Disposed. It was actually disposed. Disposed of. It was actually disposed of. Then in this case, so this one is will less. We'll end up having to less. We'll end up having to less. So remember, in this case, I told you, you can actually end up having to less it at cost. You less it at cost, or you less it at what? At net book value. You less it at cost, you less it at what? At net book value. So it means in this case, if we less it at cost, we'll have to end up having to add back the depreciation that was actually disposed. So because remember, in this case, this is basically the depreciation for what? For the entire items of plant. But now in this case, there was an item which was actually disposed of from the cost. Still the same case, out of this particular total accumulated depreciation, we have to end up having to do what? Remove. We have to end up having, in this case, do what? Remove. And of course, having to remove, in this case, it means we'll end up having to add back. So you can, in this case, add back depreciation on the disposed of what? Item. So in this case, the total depreciation on this particular disposed of item was actually 15,860,000. So the depreciation on disposed item, so in this case, you can add First of all, in this case, you can end up having to less the depreciation for the year. Depreciation for the year. Depreciation for the year. So we had done the computation. I think it was under working number 2 or something. Working number, I think it was actually under working number 2 or something. So in this case, we added what? The property, plant, and equipment, it was how much? How much are we having to get as the depreciation for property? For property and buildings. For property and buildings, it was how much? For property and buildings, it was how much? It was 10 million. It was actually 10 million. In this case, we can less this one, 10 million. What about in this case, plant? Plant, we are getting how much? We are getting how much for plant? For plant, we are getting how much? It was 14,500. I think it was 14,500. So 14,500. What about for motor vehicles? What about for motor vehicles? For motor vehicles, it was how much? Motor vehicles, it was 14 million. It was 14 million. What about in this case for office equipment? Office equipment. Office equipment. It was 5 million. It was actually 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 5 million. But in this case, as you're having to say, if you look at the item of plants, of course, you're having to deduct 111,160,000. But part of these items were actually done what? Disposed of. They were actually disposed of, which were actually having to cost how much? 39,700,000. So this item that was actually disposed of, it had an accumulated depreciation. So in this case, as per note number 1, it had an accumulated depreciation of how much? 15,860,000. So in this case, you can actually add back depreciation, add depreciation on disposed of items, depreciation on disposals, depreciation on disposals. So in this case, this one is 15,860. So 15,860. So I think those are the only items. So you can be able to do the computation. Try to do the computation and tell me the figures. So down here, tell me the figures down here. Tell me the figures down here. So how much are you having to get here? I think it is 510. Is it 510? This one is 510 million. 510 million. What about here? Under plant? Under plant, how much are you having to get? Try to do the computation under plant and you tell me the figure. Under plant, how much are you having to get? Mm-hmm. 98,780. 98,780. 135,500. I think 135,500 is the most appropriate. 135,500. So I don't know how you're getting 98,780. It should be 135,500. I think that is the correct figure. Nekesa, have you done correctly? 280 plus 111,160. This is the accumulated depreciation. Then there was an item of plant which was disposed of 39,700. Then the depreciation for the year, which you've computed under working number 2, it is 14,500,000. But we have to add back depreciation on any item which had actually done what? Been disposed of. Which had actually, in this case, done what? Been disposed of. Which had actually been disposed of. Which had actually, in this case, done what? Been disposed of. So you'll get 135,500. What about this one? So the motor vehicles, what about for motor vehicles? Motor vehicles is how much? Motor vehicles is how much? So Valerie, just follow this particular description here. You take balance brought down for property, plant, and every balance brought down for all the items. You add, you less accumulated depreciation, which you've been given in TO balance. You less any disposal at costs. Disposal at costs. You less any disposal at costs. You less the depreciation of for the year, the ones you computed for the year. You less it, then you add back depreciation on what? On disposals. Remember in our previous example, I told you in this case, you'll end up having to, in this case, do what? Less the item disposed at net book value. At net book what? Value. But here, we said in this case, alternatively, you can less at cost, then you add back accumulated depreciation. You remember what I was having to explain previously in that previous example. So here in the previous example, we less this one at net book value. But I told you can still less at costs. Then in this case, you need to make sure if you've done this, you come back and add back the accumulated what? Their depreciation on what? On the disposed of what? The depreciation on what? On the disposed of item, which in this case is exactly 15,860. So you'll end up having to get 130,500. So here it is how much? It is 14 million. 14 million. This one is 14 million. And this one is how much? I think it is 20 million. I think it should be 20 million. 20 million. Then you can add the total, because in this case, you're going to take the total figure for property and plant and equipment as one figure. So you need to add the total there. So 510 plus 130,500 plus 14 plus 20. So how much are you having to get? So 510 plus 130,500 plus 14 million plus 20. You get 674,500. So 674,500. 674,500. 674,500. So that is what you end up having to get as what? As the total for property, plant, and equipment. So it means the figure we'll end up having to pick it is this one. So don't actually take the items separately. You won't score the mark. So they only mark this particular figure here in the statement of what? Financial. So for you to be able to score the mark, you need to be able to just take that one figure. And therefore, in this case now, we can actually be able to present, we can now in this case be able to present our statement of financial position. Our statement of financial position. We can look at the statement of financial position. So BD Limited. So BD Limited. BD Limited statement of financial position as at 31st of December 2022. So in this case, we have our shillings in thousands. So we can, of course, automatically start with the non-current assets. In this case, we have property, plant, and equipment, which we've gotten 674,500. So you can look at the TO balance. Always look at the TO balance on the debit side, whether we could be having any other item which could be a non-current asset. So I don't think we have any other item. So it is not there. It is not there because we've been able to deal with all those PPs. If we had actually been told, for example, there was maybe an investment, you would have included it here, but it is not there. So we leave it like that. We leave it like that. Then in this case, we can go to what? The current assets. We can go to the current assets. So the current assets also check the debit side of the TO balance. So in this case, we can be able to see trade receivables of 74,500. Trade receivables of 74,500, 74,500, 74,500. So, so you have in this case trade receivables of 74,500. We have also inventory. Inventory in this case, you've been given in additional information there. I think it's additional information number what? Is additional information number 5. So inventory in this case, it is 85 million. 85 million. So what do you think we'll do with this? Of course, we've actually been given trade receivables of 74,500. So what will we do with it before, in this case, we place it here? What will we do with it before we place it here? There was that trade receivables, which it is there under note number. It has been discovered, note number 3. It has been discovered that the former financial controller of BD Limited engaged in fraudulent financial reporting. 12 million of the trade receivables are non-existent and need to be written off. So in this case, we'll write off that 74,500. We write off the 12 million. So in this case, it'll come to 62,500. 62,500. So I think that is what you'll be able to have there, 62,500. You can always, in this case, check the debit side of the trio balance to see whether there's any other item. Maybe you might be told there's cash at hand. There's maybe, in this case, maybe cash at bank, but there's no such kind of an item. So it is not there. It is not there. So this basically becomes what? Our only asset. So you can go to equity and liabilities. We can go to equity and liabilities. So equity and liabilities. So for equity and liabilities here, we have the equity items or elements, which in this case, we ended up having to adjust them in the statement of changes in equity. So in this case, you have the ordinary share capital. Ordinary share capital, we have the premium, share premium. We have the retained earnings. Retained earnings. So these ones, you pick the figures that are in the statement of changes in equity, because those are the balances by the end of the year. Those are the balances by the end of the year. So take notes. If it happens that the examiner hasn't told you to prepare a statement of changes in equity, you have no option, but you'll have to prepare it as part of your workings, because you need to place here the balances of these equity elements by the end of the year. And maybe during the year, they might have actually changed. They might have actually changed. So even in this case, the examiner hasn't told you as part of the requirements, this statement of changes in equity will now end up having to be, like in this case, what? You are working number 8. So you are working number 8. You'll have to prepare it because maybe these equity elements changed. But of course, they haven't told you in this case to do what? To prepare it as part of the requirements to score the mark. But in this case, you have no option, but you have to do the working, so that in this case, you can actually end up having to know by the end of the year how these equity elements had changed and what are the balances by the end of the year. What are the balances by the end of the year? So remember, any other equity element that in this case might end up having to arise, for example, mostly in this case, the examiner will put here what? Reserves. Reserves. If there's any form of revaluation, then it will go to the revaluation reserves. So they can be ordinary, share premium. These are the most common. Ordinary, share premium, retained earnings, and reserves. Like in our previous question, we had what? Reserves. We had the reserves, but it is not here. Here we have now what? Share premium. So in this case, our balances for this was how much? So in this case, for the share premium, we are getting what? Share premium tulikuwa tunapata ngapi? Share premium ilikuwa ngapi? Tulikuwa tunapata share premium ilikuwa 70 million. 70 million. What about ordinary share capital? Ordinary share capital ilikuwa ngapi? 𝗏𝗏𝗏, what of bank balance? So it is on the credit side. I think Valerie has already answered. It is on the credit side. So ordinary share capital, 240 million. 240 million. What about in this case retained earnings? The ones we computed in the statement of changes in equity by the end of the year. The retained earnings in the statement of changes in equity, it was how much? 346,300, 346,300. And therefore, I think those are the only items of equity. Only items of equity. So we can go to and actually identify whether we have in this case what? Any non-current what? Liability. Do we have any non-current liability? Do we have any non-current liability? Do you have any non-current liability? Try to think out, look at the question. Do we have any non-current liability? I can see 𝐾𝐲 says deferred tax. 𝐾𝐲 says in this case what? Deferred tax. 𝐾𝐲 says deferred tax. 𝐾𝐲 says deferred tax. So for the deferred tax, it will be how much? For the deferred tax, it will be how much? Of course, in this case, in the TO balance, is that item of deferred tax you're having to be given of 32,400. So, and then in this case, you are told a provision in note number 4, the existing debit balance of the current tax in the TO balance represents the under or over provision for what? For previous year's tax. A provision for current tax for the year ended 31st of December was 52 million is required, together with a decrease to the deferred tax provision of 3 million. So what will be our deferred tax liability? What will be our deferred tax liability? Valerie is saying 3 million. Mr. Gideon is saying 52 million. Mr. Gideon is saying 52 million. Karen Paul, what do you say? Valerie is saying 29,400,000. You people are giving good answers, good answers. Any other person who can be able to give us? So I can see 𝐾𝐲 says 29,400,000. 29,400,000. 29,400,000. So remember, in this case, we said that figure of deferred tax that in this case you've actually been given in the TO balance, it is the deferred tax at the start of what? Of the year. The figure you'll be given of the deferred tax in the TO balance, it is the deferred tax at the start of the year. It is at the start of the year. And of course, in this case, you're having to be told it was 32,400. And then there was a decrease during the year of how much? 3 million. So which means by the end of the year, the deferred tax was actually 29,400,000. So that's how you get it. That's how you get it. That's how you get it, because you are told that at the start it was 32,400,000. There was a decrease. If they would have told you there was an increase, you'd have added to know by the end of the year how much they had accumulated as what? As the deferred tax. So Valerie and of course 𝐾𝐲, you're actually correct there. So in this case, the non-current, I don't know what is the figure here, non-current liabilities. The non-current liabilities, we have in this case deferred tax. We have deferred tax, which in this case will be 32,400,000 minus 3 million, which ends up having to be 29,400,000. So we don't have any other non-current liability. So it means in this case, straight away, we can go to the current liabilities. We can go to the current liabilities. We can go to the current liabilities. Let's go to the current liabilities. So let's go to the current liabilities. So current. So for the current liability, is very easy. You just need to, in this case, go to the TO balance. And of course, on the credit side, try to identify some of the current liabilities you have. Automatically, in this case, we're having to see trade payables. Trade payables. These are just free marks you would have gotten because I don't think it has any adjustment. So our shillings are actually in thousands. So it comes to 68,800. So 68,800. Then, of course, we have what? So we have the bank balance. The bank balance, which our friend was actually having to talk about. The bank balance is on the credit side. So that is what we call what? A bank overdraft. Bank overdraft. That's what we call a bank overdraft of 15,500,000. So 15,500,000. So of 15,500,000 or 15,500,000. Then if you look at note number, note number 5, note number 5 is about inventory. Note number 4, a provision for current tax for the year ended 31st of December was 52 million. So it was a provision, they didn't settle it. So in this case, you have current tax provision. So they had to pay it. They'll pay it later on in the coming year. It was of an amount of 52 million. So take notes. In most of these published accounts, financial statements, under the current liabilities, this item rarely misses. This item rarely misses, and of course, this one also rarely misses. So this one will rarely miss, and this one will rarely miss. So it has to be there. It has to do what? It has to be there. It has to be there. This item has to do what? Has to be there. This item has to be there. It has to be there. So in this case, we can do the totals. You can do the totals and try to see what are you having to get. What are you having to get when you add? Try to add this one. Valerie, very quickly. Valerie, very quickly. Very quickly. Irene, add the liabilities and the release. So what is the figure here? First of all, give me the total figure for equity elements. For equity elements here, what is the total figure for equity elements there? So this one is 8, Nekasi is saying 822 million. 822 million. What's the total for equity elements here? For the equity elements here? $656, 300. 656, 300. Then the total, just total now. Irene, just total now. Valerie, just total these others now. $822 million. So 822 million. So 822 million. So so that particular statement of financial position, it was 10 marks. It means for each and every entry you make, you'll get 1 mark. So 1, 2, 3, 4, 5, 6. Every correct entry you make, you get 1 mark. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you would have gotten 10 marks. They don't actually normally focus on this particular figure here when they are giving marks. That's why I told you of so much importance. Make sure you are trying to put what? Correct entries. Your entries are actually correct. And of course, I've been able to tell you some of the figures, you just pick them directly. So in this case, don't look at the question and you feel like it is very difficult. Don't look at the question and you feel like in this case, it is very difficult. You cannot be able to tackle it. You need to try. Karen Paul, you need to try. And at least in this case, put in some of the entries. So of course, this one automatically needs what are working. It's a very tricky figure, this one. Is a very tricky figure. But these other ones, like this one, you just pick it as per the additional information. Like in this case, this one, you just pick it. Rarely it will have adjustments, this one. Even sometimes in this case, this one will rarely have adjustments. It's not so many adjustments. So you just end up having to pick the figures and you place them there. The current tax figure in this case, rarely it will change. You just pick it the way you've been given. In the additional information, you put it there. So you cannot actually end up having to, in this case, do what? Score a 0 here. You'll end up having to get a mark. You'll end up having to get a mark. And of course, in this case, in the exam, if you realize that in this case, it is not balancing, Valerie, don't waste your time trying to balance. Go to the next question. You'll waste a lot of time in this case trying to balance. The most important thing, try to make sure you are getting what? Correct entries. Correct entries. Don't, in this case, focus a lot on having to balance. Having to balance. Having to balance. Sawa, having to balance. I can see Alex Kirimi is having to ask that in this case, how do we treat current tax balance in the TIO balance? So what did we say we treat it as? What did we say we treat it as? Who can be able to remind us? The current tax balance in the TIO balance. How did we say we treat it? How did we say we treat it? It is a tax expense. It is a tax expense. It is a tax expense. So, of course, in this case, you'll end up having to compute it as part of what? The income tax what? Expense. But there's something we said about it. There's something we said about it. Karen Paul, there's something we said about it. that current tax balance in the trio balance, there's something we said about it. And in fact, in this case, I gave you an NB. I gave you an NB. So I'm wondering, Alex, did you write that NB? Did you write that NB? So we treat it as what? We treat it as what? I can see you're saying, oh, okay. Oh, okay. I gave you an NB. What was the NB having to say? So when on the debit side, it's a tax expense and deducted from the income tax. Deducted from the income tax. So we said it is what? It was what? They actually, in this case, underprovided for tax. They actually underprovided for what? For tax. It is an under provision. And therefore, in this case, you end up having to do what? Deduct it. You end up having to deduct it. But if it happens in this case, is actually on the credit side, is actually an over provision. And then in this case, you'll end up having to do what? You'll end up having to add it. It will end up having to add it. So it can either in this case be an under provision or an over provision. It can actually be an under provision or what? An over provision. So in this case, if it's on the debit side, it is an under provision. If it's on the debit side, we said, if it is on the debit side, if it's on the debit side, it is what? An under provision. An under provision. If you've been given that current tax figure in the trio balance on the debit side, is an under provision. And therefore, in this case, you add on the tax expense. Add on the tax expense, you add on it. You add on it. They provided less. And therefore, in this case, you have to include it now to increase the tax expense. If it happens, you've actually been given on the credit side, it means it was what? An over provision. It was an over provision. It was an over provision. And therefore, in this case, you less from the tax expense. So if you've been given a current tax figure on the debit side of the trio balance, it means it was an under provision of what? Of current tax. And therefore, in this case, you end up having to add it so that it increases what? The tax expense. If it's on the credit side, it was an over provision. And therefore, you less. And of course, this basically, in this case, we said it will end up having to affect the income tax expense. It will end up having to affect what? The income tax expense. This is how it affects the income tax expense. So if it's on the debit side, is an under provision, you add. If it's on the credit side, is an over provision, therefore in this case, you do what? You less. You less. Remember, this particular tax here, they make a provision. They make a provision. Like in this case, this one is 2022. They won't pay it in 2022. They'll end up having to pay it in 2023. They'll pay it in 2023. But when, of course, when they're having to settle with the taxman, in the year 2023, they realize that they provided for 52 million. But now in this case, they have ended up having to pay, in this case, maybe 40 million. So it means in this case, they had actually made what? An over provision of 12 million, which they won't pay the taxman. They won't pay what? The taxman. They won't actually pay the taxman. And therefore, in this case, it will reduce the coming year's what? Tax. They have to less it. They overprovided. When they came to 2023, they want to pay KRA. KRA told them, you won't pay 52. You're going to pay 40 million. So they had provided in excess. They'd actually provided in excess in the previous year. By how much? 12 million. And therefore, in this case, that over provision, you have to less it in the coming year's what? Income tax expense. It will reduce the incoming year's income tax expense because you had already deducted it in the previous year. So you have to, in this case, do what? Less it. If it happens, for example, in this case, they have made a provision of 52 million, then KRA tells them it is not supposed to be 52. You'll end up having to pay, in this case, 55 million. So they had made what? An under provision. So they'll incur 3 million extra in the year 2023 to settle KRA. It won't be 52 million because you're having to say, this one is a provision. That's why it is a liability. You don't pay it in 2022. You pay it in 2023. But when you want to settle, you are told that in this case, you won't settle 52. You'll settle 55. So it means you'll have to look for another 3 million. You'll have to look for another 3 million, which in this case, you have to pay. And therefore, if it is an under provision in the previous year, which ends up having to increase your income tax in the year 2023. And therefore, in this case, that's why in this case, you're having to say it will likely be on the debit side. That's why in this case, we end up having to add either You add an under provision or you less what? An over provision. These are basically, in this case, it ends up having to affect what? The income tax expense. The income tax expense. So take note of that. Is also a very another common element the examiner also really likes. Under provision or over provision of what? Of current tax. Don't forget about it. Remember it. Remember it. So remember about the deferred tax. And also in this case, sometimes under exceptional situations, you might bring this one and include it as part of what? The computations for what? For the income tax expense. So this one rarely misses. This one you have to know how you treat it, deferred tax. In published financial statements, it rarely misses this one, deferred tax. So you have to know how you can be able to treat it. You have to know how you can be able to treat it. So that's basically what will end up having to happen. What will end up having to happen. So I think that's it with that particular question. That's it with that particular question. So I gave out an assignment, which surprisingly only one person has actually been able to submit. So make sure you try to and actually be able to tackle that particular assignment. Try to tackle it. Try to tackle it and you share. Try to tackle it and you share. It is very important. Very important. Remember, published will be there. Published financial statements will be there. So published will be there. So I want us now in this case, we change gears a bit. I want us we change gears a bit in the remaining minutes. Then in this case, I want us we look at International Accounting Standard number 7. International Accounting Standard number 7. This is what? Statement of cash flows. Statement of cash flows. Statement of cash flows. You can write this IAS 7, statement of cash flows. 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 I explained note number 4 over the assignment. I even don't have the question currently. But what you can do, you try to attempt it, then you share it. So Valerie, try to attempt it, then you share it. So there's a reason as why in this case, I want you to try to attempt it, then you share it. Then I think I'll be able to explain to you. Try to attempt it, think through. Try to attempt it by yourself. Then in this case, I'll be able to explain to you how you can be able to deal with it. So Valerie, so no problem. No problem. So if you attempt it and you share with me, so be guaranteed I'll be able to give you the answer immediately. I'll give you the answer immediately. But in this case, let's look at International Accounting Standard number 7, Statement of Cash Flows. Statement of Cash Flows. So what is a statement of cash flow? So sometimes in this case, organizations are actually so much interest to be able to know how their cash flows are having to behave. So their cash. And ideally here, we're just having to look at what are some of our sources of cash as a business. And of course, how are we having to spend this particular cash? Because in this case, overall, ideally in a business, what is actually of so much importance, you hear people having to talk about if you don't have money, if you don't have the cash flow, then everything actually ends up having to do what? To stall in the business. Ends up having to stall in the business. And therefore, in this case, you must actually be able to understand how your cash is actually having to behave in terms of, in this case, what could actually be the sources. And in this case, what is having to make the cash end up having to do what? To go out, end up having to go out. And therefore, in this case, overall, that is what, in this case, a statement of cash flows will actually end up having to do what? End up having to present, So that is what, in this case, will actually happen under what? A statement of cash flow. So ideally, what you're going to look at here, it is how you can be able to prepare a statement of cash flows. And of course, you'll be able to say there are two methods as to, in this case, this statement of cash flows is normally prepared. So in this case, we have what we call the direct method, and you have what we call what? The indirect method. The direct method, and of course, what? The indirect method. So you can be able to write this about what? Statement of cash flows. So it is a statement, you write, it is a statement showing It is a statement showing. It is a statement showing. It is a statement showing. It is a statement showing the sources of cash. It is a statement showing the sources of cash. The sources of cash from revenue, the sources of cash from revenue, and capital transactions, and capital transactions, and capital transactions, and capital transactions, and capital transactions. E.g., by this we mean sale of goods, sale of goods, sale of goods, e.g. sale of goods, sale of assets, sale of assets, sale of assets, issue of shares, issue of shares, issue of shares, etc. So whenever these ones happen, you get money. So sale of goods is trading activities of the business. You sell your goods, you get money. You sell your assets, you get money. You sell shares, you get money. So that basically will be a source of what? Cash in the business. So on one side, in this case, you're having the sources of cash and how such. So after these, etc., you say, and how such cash, and how such cash, and how such cash, and how such cash, and how such cash is utilized in meeting the revenue, in meeting the revenue, in meeting the revenue and capital expenditure, in meeting the revenue and capital expenditure, in meeting the revenue and capital expenditure, and capital expenditure, and capital expenditure. E.g., some of the expenses here, and of course, some of the revenue and capital expenditure here can include, for example, e.g., payment of salaries, 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 acquisition of assets, acquisition of assets, etc. So overall, in this case, it will be able to show how cash is coming in. Either in this case, you've sold an asset, either you've sold goods, either you've sold what? Shares. And also this statement of cash flow will also be able to show how cash is moving out. Maybe you've paid salaries. Maybe in this case, you've ended up having to buy an asset. You've purchased an asset. So it will be able to show all those. It will likely end up having to show all those. So we can look at a few definition of terms regarding statement of cash flows. So definition of terms regarding a statement of cash flows. Definition of terms regarding a statement of cash flows. So definition of terms regarding a statement of cash flows. So you can start in this case with the cash. So we can start with the cash. We can start with cash. Then you write and say, this represents cash in hand. This represents cash in hand. This represents cash in hand and cash at bank. So this represents cash in hand and cash at bank. This represents cash in hand and cash at bank. This represents cash in hand and cash at bank. It represents cash in hand and cash at bank. Then in this case, term number 2, cash equivalents. Cash equivalents, number 2, cash equivalents. Cash equivalents. These are short-term, highly liquid investments. These are short-term, highly liquid investments, cash equivalents. These are short-term, highly liquid investments that are readily convertible, that are readily convertible, that are readily convertible, that are readily convertible to an amount of cash, to an amount of cash, that are readily convertible to an amount of cash, that are readily convertible to an amount of cash. So they are simply those items that you can actually easily be able to, for example, convert into cash. So you can wake up one day and you say, I want to convert them into cash immediately. So you can give examples: treasury bills and bonds, treasury bills and bonds, treasury bills and bonds, treasury bills and bonds. So treasury bills and bonds, treasury bills and bonds, treasury bills and bonds, treasury bills and bonds. So that is an example of a cash equivalent. So you can wake up, if you have treasury bills, you go to the market, and of course you decide you're going to sell. So you sell them, you get the money. You can have bonds and you decide, let me sell them. So they are cash equivalents. They are simply those items that you can actually be able to easily convert into cash. Then in this case, we have number 3, cash flows. Cash flows. Cash flows, cash flows. So cash flows. These are inflows and outflows of cash. These are inflows. These are inflows and outflows of cash and cash equivalents. These are inflows and outflows of cash and cash equivalents. So when they are having to come in and go out, we refer to that process as what? As cash flows. In this case, these are inflows and outflows of cash and cash equivalents. These are inflows and outflows of cash and cash equivalents. These are inflows and outflows of cash and cash equivalents. Then in this case, we have non-cash items. Non-cash items. See, it is good you understand these terms because you'll be using them when you are preparing the cash flow statement. So non-cash items. Non-cash items is another term. Non-cash items. These are items of income. These are items of income or expenses. These are items of income or expenses which do not involve cash inflows, which do not involve cash inflows, which do not involve cash inflows or outflows, which do not involve cash inflows or outflows, which do not involve cash inflows or outflows. E.g., I'll give an example, e.g., depreciation. So you normally recognize it as an expense, but ideally, there's no money that has gone out of the business. It's just the loss of value of an asset, but you haven't paid any money out. So in this case, it's a non-cash item. So in this case, you have depreciation, allowance for allowance for bad debts. They don't involve cash having to go out. Allowance for bad debts. So they are non-cash items. They are non-cash items. Allowance for bad debts. Allowance for bad debts. Gain or loss on disposal. Gain or loss on disposal. Loss on disposal. So for example, this gain, you end up having to recognize it as an income. And the loss, you end up having to recognize it as what? As an expense. So that's what will end up having to happen with those ones. We call them non-cash items. Then another term we have in this case, operating activities. Operating activities. So what is operating activities? Operating activities. We have in this case, operating activities. So you write this about operating activities. So it is one of the components, is actually one of the components of a statement of cash flow. So we'll categorize some of the activities as what? As operating activities. So what are these? These are revenue generating activities. These are revenue generating activities of the enterprise. These are revenue generating activities of the enterprise. These are revenue generating activities of the enterprise. These are revenue generating activities of the enterprise, e.g., sale of goods, e.g., sale of goods, e.g., sale of goods, e.g., sale of goods. Then number 6, investing activities. Investing activities. Investing activities. So what do you mean by investing activities? Investing activities. These are activities that involve, these are activities that involve sale of fixed assets. These are activities that involve sale of fixed assets, sale of fixed assets, comma, acquisition, sale of fixed assets, acquisition of fixed assets, acquisition of fixed assets, sale of fixed assets, acquisition of fixed assets, acquisition of fixed assets, comma, disposal of investments, disposal of investments, disposal of investments, etc. So they involve sale of fixed assets, acquisition of fixed assets, disposal of investments, etc. So we call those kind of activities what? Investing activities. So also the cash flow, this is one of the, we'll be able to see the format. When you look at the format, you'll be able to see that part of the activities, we normally categorize them as investing activities. Some of the activities, we categorize them as operating. So if they are revenue generating, or in this case, incurring revenue expenses, we put them under operating activities. If they are, in this case, having to involve any sale of fixed assets, acquisition of a fixed asset, disposal of an investment, so that kind of an activity, we'll call it what? Investing activity. So those cash flows coming from that, those kind of activities, we'll be able to call those activities our investing activity. Then we have, in this case, financing activities. Financing activities. So financing, basically, these are now the equity elements. So financing activities. Financing activities. Financing activities. So financing activities. So these are activities that result in changes. These are activities that result in changes. These are activities that result in changes in the size and composition, in the size and composition, in the size and composition, in the size and composition of the capital, of the capital, of the capital of the company, the size and composition of the capital of the company, the size and composition of the capital of the company, the size and the composition of the capital of the company. You can give an example, e.g., issue of new shares. Give example of activities, e.g., issue of new shares, issue of new shares. We have, in this case, redemption of shares, redemption of shares, redemption of shares, redemption of shares, etc. 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 So those basically, in this case, will be the different kind of activities. And therefore, in this case, the cash flow is normally split into those 3 activities. And that is what we'll be able to see under what? Under the format. So so we can end there. We can end there. But now in this case, we can just be able to write. You can just be able to write the final paragraph. You can just be able to write the final paragraph. The final paragraph. We can just be able to write the final paragraph. The final paragraph. You can just be able to write the final paragraph. So methods of preparation. So methods of preparation. Methods of preparation of a statement of cash flows. A statement of cash flows. Methods of preparation of a statement of cash flows. Then in this case, you can be able to write number one. In this case, we have what we call the indirect method. Indirect method. And then number two, we have what we refer to as the direct method. What we refer to as the direct method. The direct method. Direct method. So in our next class, I'll be able to give the format of the two. Then I think we'll be able to look at an illustration. We'll be able to look at an illustration, how you can actually end up having to come up with a statement of cash flows, how you'll end up having to come up with a statement of cash flows, statement of cash flows. So statement of cash flows. So you want me to give you an example already, an example already for statement of cash flows. Missy, you want me to give you an example of statement of cash flows? You try. Yes, so I'll share it on the group. So I'll share on the group so that you can be able to try. So I haven't been able to identify the example, but I'll be able to share it on the group so that you can be able to try before, in this case, we come to the next class. So I repeat financing activities. I repeat financing activities. So these are activities that result in changes. These are activities that result in changes in the size and composition, that result in changes in the size and the composition of the capital of the firm, in the size and the composition of the capital of the firm, capital of the firm or company, capital of the firm or company. So I think we can end there. So let's meet hopefully tomorrow. So we might have that makeup for the class we missed yesterday. So maybe tomorrow 6 p.m. But we'll see what will happen by tomorrow. Let's see what happens tomorrow. We might have it at 6 p.m., but I'll be able to communicate. So make sure you attempt the assignment for published financial statements. If you attempt and share, I'll be able to go through it. I'll try to identify the corrections and I'll inform you how you would have been able to go about it. So the next thing we'll likely be tackling. So of course, I'll give that illustration for statement of cash flows. You can try it, but we'll do it together in class in the next class. We'll do it together in class in the next class. So that is what I can be able to communicate. That is what I can be able to communicate. So take note also in this case, we did a class during lunch hour on Wednesday, which I think I shared the notes. I shared the notes. I think in this case, we looked at IAS 20, and of course, in this case, IAS 21, and I think IPSAS number 4. So we looked at these particular 3 standards. One was about, in this case, government grants. The other one was, in this case, about foreign exchange. So foreign exchange transactions. So look out for that handout on the group and go through it. The video I have not actually yet been able to upload it. Maybe I'll be able to upload it maybe tomorrow, but I haven't uploaded. But the handout I think I shared, you can go through it. It will help you. So I think we can end there. So unless there's any burning question you can be able to ask. Otherwise, let me just wish you a good night. So, and of course, you can start enjoying the weekend. You can start enjoying the weekend. Immediately after this class, you can start enjoying the weekend. So you can have a good night.